I'd like to call up our LPG panel and panelists now. You can sit wherever you want, but we just want you to sit together for the movie part of this. So maybe whatever 5 in a row you'd like to do. Øystein Vaagen, head of research at Fearnley Securities, is going to lead the way for us. And Øystein, I turn it over to you. Thank you.
Okay, hello everyone. My name is Øystein Vaagen. I'm an equity research analyst at Fearnley Securities, and today we have a great LPG panel with Anders Onarheim, starting from your right, CEO of BW LPG, Randi Navdal, CFO of Avance Gas, Matt Zacho, CEO of Navigator Holdings, and Ted Young, CFO of Dorian LPG. So I had the pleasure of hosting this seminar last year. We had quite the optimistic bunch sitting here, and I'd assume this bunch hasn't become less optimistic given where rates have been moving over the past year and also so far this year. You have rates at the moment, at least on the VLGC side, which is at $100,000 per day for some routes. They have so far this year averaged 220% above cash break-even levels. So it's not that bad. All guys are earning a lot of cash, paying out dividends. So I think last year uncertainty was surrounding the order book. Thus far, it hasn't seemed to be a big problem on the VLGC side. So Ted, I think we can kick it off with you. If you want to start telling us what has happened so far this year, why are rates so strong?
Yeah, I think if I knew the answer to that, I'd be retired. But I'd say a short answer is, if you look back to the panel last year, we were just in the early innings of the Ukraine conflict. And if you take a look at the full year 2022, Mideast LPG exports, which have been roughly flat at 36 million metric tons for quite a few years, spiked to 42 million metric tons. So it's a 20% jump. 7 million metric tons of exports corresponds to somewhere between 28 and 35 VLGCs. That helped absorb a lot of the fleet. I think Anders and I have spoken about it quite a few times over drinks and just kind of shaking our heads because I don't think any of us expected rates to be where they were this year. We've obviously had a pretty healthy new order book to absorb this year, but we did know all along that there were going to be 60 vessels surveyed due this year, and that certainly played out, I think, as expected. But I think, at least from Dorian's perspective, the health of the trade out of the Middle East has been probably the most significant driver. And the question any savvy investor will ask is, well, how long? And I guess our perspective is similar to others in that, given what we've seen from Russia out of Ukraine, it's not our view or too many others in the world that Europe is going to go back to ordering hydrocarbons and buying hydrocarbons from Russia. So there's going to be this shift that we've seen and the resulting growth in LPG exports, we think is relatively permanent, or at least as permanent as things can be in shipping. So I guess that's probably our simplistic overview at this point.
Thank you. And Mads, you guys operate in a bit different segments than the VLGCs, so maybe just a quick overview of where we are on your side as well.
Yeah, I guess we're I'm the odd man out here, operating mainly handy-sized vessels, so slightly smaller than the VLGCs. That also means that we are transporting more types of commodities than LPG. We are transporting ammonia, we are transporting petrochemicals like ethylene, but also LPG. And we have seen relatively good robustness in all markets. And it's a lot like what Ted says, that the logistics, the global logistics chain has been disrupted by the Ukraine war, and we don't think it's going to normalize either. And that means more distant traveled for ammonia, for LPG, and then you could say petrochemicals is maybe a little bit of a different story, but here definitely the COVID restrictions disappearing in China, and China this year growing more than 6%, compared to slower growth in the rest of the world, I think is definitely helping our ton-mile transport. So we have pretty robust segments and pretty good growth opportunities.
Perfect, thank you. And as most people who follow the LPG sector know, the arbitrage is a large driver of freight, meaning basically price differential between east and west on for example, propane. What you're seeing right now is, at least seasonally, relatively high propane inventories in the US. Exports are strong. So if we start on, call it the US side of this freight equation, if we want to call it that, Anders, what are you guys seeing or thinking and hearing on US LPG production going forward? Are estimates that they're going to rise a safe bet, or what's your view on that?
I mean, that's of course the big question for us in the long term. At the moment, as you said, we see, great levels of production. We see, as you said, very high inventories helping us dramatically, and LPG will always move. As long as the product will move, and so certainly at the short term, we're smiling and happy and hoping that we're going to stay like this for quite some while. In the long term, we have to watch it closely. We spend a lot of time trying to understand what the profiles are of the various fields, and we also of course listen to the terminals, and then they tell us again they're investing quite heavily in new capacity. So we're still quite optimistic, but of course it is really the key for our market in the longer term.
And it's also obviously most of demand is now arising in the east. It's China is a big importer of LPG, kind of a black box at some aspects. Randi, how are you trying to tackle that equation, and how are you looking at Chinese LPG demand?
Well, looking at the key import nations in Asia, we have China, India, Japan, South Korea, and Europe, where China and India is the main key drivers here. So last year we saw Chinese imports increase considerably by 10%. It seems like it's been the same trend into this year. So in May, we actually saw record high import numbers with 3 million tons being discharged around Chinese terminals. And this is on the back of new PDH plants starting up. 4 of them are scheduled for starting up within this quarter. And for the remainder of 2023, we have 8 new PDH plants commissioning, which requires a monthly average tons of 500,000 tons on a monthly basis, which is quite significantly. Looking on the Indian demand, where the residential demand lies, where they use LPG as an energy source instead of coal and wood. The demand is driven by governmental policies and subsidies to use this as an energy source. And we also see that the demand has been quite considerably into the first quarter. We saw an increase of 13% compared to first quarter last year. And it seems like the supply side, domestic supply in India is going to be quite short in the short term into the summer, which means that we expect to see maybe a boost of cargoes flowing to India, which is positive.
Perfect, thanks. And not to spend, obviously it's important to spend time on demand here, but a question that was very important last year was the supply side, and especially on the VLGC side. You had an order book at 22%, now it's at roughly 25%. There was around 48 new builds scheduled for delivery this year. It's just below 20 so far. So there's probably some slippage, and I can start with Ted. What happened to the order book? Why is it being drastically absorbed? And how are you looking into 2024? Because assuming there's no more slippage, which there is likely that there will be, you have an order book at below 10% post 2023, which is not looking quite hefty or very similar to dry bulk or not as low as tankers, but you're up there. So how are you looking at, you know, the order book now? Are people looking at new builds even at these prices? And then what's your thoughts there?
From a Dorian perspective, you know, we're not looking at new builds. New builds are in excess of $100 million these days, and when you kind of run the standard IRR math that we all run, you really need to make what I consider pretty heroic rate assumptions compared to the long-term average. So the long-term VLGC rate going back to 1990 is probably about 30,000 a day. It's ticked up a bit since the U.S. started exporting in 2014, maybe closer to 33, but $33,000 a day is not going to amortize that ship in any way that's going to be an acceptable return to probably any of the people on this panel. Some people do it as an asset play, God bless. So I think we continue to be intrigued. I mean, we've taken advantage of it a little bit. We've chartered in 3 dual fuel new buildings that are actually old Panamax beam, that have 2 of which have already delivered and 1 will deliver, you know, in the next 6 weeks or so. Look, those guys built ships at a cost of capital with which we could not compete. However, we could charter them in on a basis that made economic sense to us and make a profit for our shareholders. So, you know, we continue to monitor it. I think all that said, Randy's 100% right about the upside from both. You know, there's a lot of secular growth going on in LPG because of its abundance in the U.S. and its relative cheapness. So on top of growth in consumer demand in China and India, and on top of the PDH demand we're seeing in China, we've now seen a proliferation of mixed steam cracker, you know, mixed-use steam crackers that can take a lot more LPG than they could in the past. And so that's created some additional swing demand, which historically has driven a lot of volatility in the sector. It will continue to drive volatility because those guys will constantly switch between LPG, naphtha, and I guess in a certain extent they can take ethane, which of course is you know, growing in exports as well. But you know, I think we believe that given the shift in energy production, given the secular growth we see in the product, and probably some slippage, you know, nobody likes an order book as big as ours, but we do think it's probably bearable over the near term, and it of course sets us up much better for 2024.
Thanks. And the Panama Canal has become quite an interesting factor in the VLGC space. We're also seeing some news earlier this week about new draft restrictions. So I can give this one to Anders. How important is this, and how important will it be going forward as well?
It's major important. I mean, the Panama Canal is extremely important for us, and as you said, with the, you know, with the new draft issues, this could across much more disruptions than we've already seen before. And of course, VLGCs, we are far back in the queue, so we're not prioritized. And if this continues, and it looks like it will continue, it's going to have a major impact on our market. And of course, I mean, I think I think just stepping back, I think here in the LPG space, I mean, we've been a huge beneficiary of both inefficiencies, also of course the Ukraine situation, you know, with now the focus on energy sources being, you know, in the U.S. and Middle East, and of course also I think the ESG story has actually helped us, because this real strong focus on ESG, and of course have created, I think, opportunities for LPG as a product, as an energy source. And I would also argue that LPG and our companies are actually perfect ESG stories. We've actually made the decision to go for dual fuel, so we've done the E. Our social responsibility, I mean, there's, you know, besides, you know, here in the US and Europe, we're very concerned about, you know, our own needs. There's 7-8 billion people out there that really need energy. And, you know, that's something that LPG can provide. And of course, also on the governance, you know, I looked that up too, what's important? Well, that we actually, we make good decisions as a company, we're profitable, so we continue to deliver energy to these people. So I think it's, so to those investors sitting here, LPG, we're a small forgotten sector often, but you also know that when the supply of investor capital is small, opportunities are great.
Yeah, thank you. And that kind of brings us over to the next, call it theme, and perfectly with decarbonization, propulsion, etc. And why aren't people ordering more LPG dual fuel compared to other sectors? You're seeing a lot of methanol, you're seeing talks of ammonia. We can start with Mads here. You guys signed an MOU earlier this week, if you want to touch a bit upon that as well.
I think there's going to be a continuous flow of opportunities from the energy transition that will give us great growth opportunities. We announced that we will be setting up a joint venture with Boom Yamada to transport CO2 in the UK sector. There's going to be maybe 30 million tons of CO2 to be sequestered and deposited just from UK alone. So imagine if you look at the rest of Europe and the rest of the world, there will be enormous volumes to be shipped, and so that's of course good. We're also very optimistic about the outlook for ammonia, particularly the blue ammonia, where natural gas is used combined with carbon capture and storage. Here, we think that the production will be ramped up very, very quickly, particularly in North America, in Houston, and that will be good for shipping because it will be shipped cargoes. Today, maybe 180 million tons of ammonia is being produced. A small fraction is being transported. But now that the application, it's not only going to be used for fertilizer, but also for marine fuel, for energy in power plants, this is really going to take off in a major way over the next, let's say, 2, 3, 4, 5 years. So shipping will also, I mean, we are great proponents of ammonia. We transport it on 10 out of our 50 ships today, and we think it's going to be the future fuel for us because it's efficient, it's easy to scale up, and it doesn't have a C in it. I mean, there's no CO2 emissions.
Perfect. And Randi, you guys ordered 2 MGCs a couple of weeks back, which seemingly was at pretty attractive prices. Was it, and they were ammonia ready? Were these, was it more opportunistic given prices, or why are you entering that market?
We operate today 14 VLGCs, and we would, from a commercial and operational perspective, increase that fleet. So we would love to contract VLGCs, more of them to have more flexibility, basically. But the issue, as Ted touched upon, is the new building prices. We contract our 6 new buildings back in 2019 until 21 at an average price of $80 million per vessel, and today it's quoted at 105. So it's by far too expensive to do that investment today. And back in the past, it's been more about investing and divesting at the right time in the cycle, basically. And that's what we did on the 6 dual-fuel VLGCs that we ordered a few years back. So we're kind of duplicating that now with the MGCs, where we see the same opportunity. It's a good timing, it's a good price, and they're also capable of running on LPG, carrying LPG and ammonia if that becomes a commercial trade ahead, and we see opportunity there as well. As Mats touched upon, we also see blue and green ammonia projects within the European trade with these vessels. So there's definitely a potential there. But for Avance, as I said, it's more about investing and divesting at the right time in the cycle, invest in assets that are more environmental friendly, and this goes also hand in hand with the economics, and we are, by the end of the day, able to generate positive cash flow in the future and return value back to our shareholders.
Perfect, thank you. And Ted or Anders, you have anything to add? I know Anders is a big proponent of LPG dual fuel. You had said some stuff earlier, but if you...
No, I mean, we made, of course, we pioneered the Doofoil LPG propulsion, and I think for us it was an important decision. We, as an industry leader, we also said, let's try to retrofit rather than build new, both because we think, returns are better. And we are a very return-focused company. And today we're very pleased with that. We have now 15 ships on water running on LPG. And of course, there's always teething issues with new technology. But I think we're really starting to get great results now. A lot of hard work, both internally and with MAN, but we're getting great results. So, and to me, I heard Dr. Kent earlier today. He sort of portrayed that maybe in only a couple of years going forward, then there'll be ammonia-fueled vessels out there. Personally, I think we are still looking at another 7 to 10 years before that's going to be realistic. And so I think dual-fuel LPG actually could be interesting for many segments in shipping, not just the LPG sector. And so I encourage at least everybody that's looking into dual fuels to also just check into the performance of the LPG dual fuels and look into it, because it's really starting to become a factor.
Yeah, I think would echo some of what Anders said. It's funny, we've gotten very similar fuel savings, even better than we're seeing in our LPG dual fueled, just with our scrubbers. And scrubbers have the benefit of costing about a third of the cost. So the carbon footprint is just overall lower in terms of its production, transportation, and everything else. But I think we're aligned that it's a fabulous product for the future. And I'll say I don't really understand why LPG isn't more popular. There are, 115 VLGC capable ports in the world. There are a whole lot more MGC and small gas carrier capable ports in the world. I think that dwarfs the number of LNG capable ports in the world. I think LNG it's a bigger market. It gets a lot more attention. We get it as an industry. I think we're a bit overlooked. And I don't think it's for lack of effort by this group or the World LPG Association. But it really is generally cheaper, requires much less shoreside infrastructure. The bunkering infrastructure already exists. You have to make LNG bunkering ships. We've got a massive fleet of 500 to 2,500 CBM vessels out there that are perfect for bunkering. They do ship-to-ship operations as it is. So I kind of scratched my head why we don't see more of it, but I guess time will tell.
And I think, just to add, I think it's also, again, we made a decision, then to retrofit rather than build new. I think it's, in baseball terms, we felt it's better now to, go for base hits than just a home run. And I think retrofitting is also something that one should consider. I think in this whole space, I think in the shipping industry, we're making, I think, great progress, much better progress than we've been given credit for. And I think one of the solutions is to really look at the existing fleet. How can we make the existing fleet, cleaner? And retrofitting works.
Great. And talking about the popularity of LPG, as we have 3 minutes left, I think we can talk a bit about equity pricing. Together with the market, it has picked up. You're all listed. You're all paying out cash, and some are also doing buybacks on top. You've gone from being priced at around 60% of NAV now to 80-90% of NAV. Rates are high. If you look on VLGCs specifically, compared to most other shipping segments, at least over the last 7 or so years, you've outperformed on a relative basis versus cash break-evens. How are you guys looking at equity pricing now? And I can probably throw it to Anders, as you're doing buybacks as well. What's your view there?
No, I think, as I said, I think the investor supply of capital into this sector has been limited, and so I think that's why it creates opportunities. And of course, again, I'm not going to mean so much about our share price, but I certainly can tell that we're going to be paying out a lot of cash going forward.
Any other views on the?
I think the same goes for us, that paying out dividends and doing share buybacks is definitely on the agenda. I think our discount to NAV is probably a little bit more higher for us, but that of course in itself also creates opportunities. I think the growth opportunities we have in front of us makes us balance the payout a little bit more. We want to continue to be a growth company. We think we have an abundance of opportunities, so we will eat the cake and have it too by paying out dividends, doing share buybacks, and also growing the company significantly. That's really the aim.
Yeah, I'd say, it is a bit of a Goldilocks market right now in our world. Hydrocarbon prices are where we need them to be. There's plenty of demand for the product. There's good secular demand for the product, and that is reflected in absolute share prices. I'd say, at least for the VLGC quoted guys, with dividend yields, we don't get a whole lot of credit for our dividend yields. I mean, we're all priced at double-digit yields, whether it's, you can calculate it different ways, but 16%, 25%, 40%, whatever. So we're obviously not getting a whole lot of credit, which would implicitly suggest that there's theoretically upside in equity prices in our sector. But again, the market is sometimes short-term irrational, it's long-term rational, so I guess only time will tell.
Agreed. I think we're about to round things off, but I think the base case, or call it the takeaway here, is that rates are strong, and once you look past this year's order book, it's very comparable to most of these other shipping segments with low order books. You have to wait quite the time to get a new build, and it's very expensive as well. So we do think these shares definitely still have legs, even after having more than doubled for most of these names over the last year and a half. So with that, I say thank you to the panel.
Thanks a lot.